Friends, we do have the next technical session in which we'll be deliberating understanding REIT's key features and benefits. And for this, we do have CA Neeraj Toshniwal, CFO, Knowledge Realty Trust and Executive Committee Member, Indian REITs Association. So, welcome CA Neeraj Toshniwal, sir, on the dais. CA Neeraj Toshniwal ji is the Chief Financial Officer of the Knowledge Realty Trust and Executive Committee member of Indian REITs Association. He holds a bachelor degree in commerce from Maharishi Dayanand Saraswati University, Ajmer, and is a qualified chartered accountant certified by the Institute of Chartered Accountants. He is also CS and completed certificate of course in Master in Business Finance from ICAI. Neeraj has more than 21 years work experience. He was previously associated with ESR Development Partner LLP as the Senior Director Finance, with Capital India Finance Limited as the Chief Finance Officer, with Tata Realty and with the Infrastructure Limited and International Biotech Park Limited. Welcome, sir. Welcome, CA Neeraj Toshniwal, with a big round of applause. So I request Neeraj ji to please take the session on.
Good morning, everyone. It's Mr. Ramamurthy, has given a dhurandhar shuruaat. अब उसके बाद में मुझे बुलाया. It's a tough task for me, but I'll try to see that how can I engage the entire audience here. So I have a small presentation. So first of all, I would like to thank ICAI, especially EIRC, for giving this wonderful opportunity to discuss one of the most current and exciting topic, REITs. And see the timing. In last budget, there was an announcement for setting up CPSE REIT. And today we are here to discuss this topic, REIT. With IRA, we are doing a lot of work with state governments. We have done some sessions for Maharashtra government, UP government, and others also, for making them aware about this product REIT, how REIT and InvIT also successfully, raise foreign capital and use that capital to deleverage the funds in the projects, and deleverage funds were utilized for nation building. So that's the concept. That's why we were engaged through IRA with various governments and providing them these possibilities. Now, in previous session, we heard about mutual fund investments, mutual fund right hai. I'll start this session with a statement, REIT right hai. And during this, maybe next half an hour, idea is not to, make yourself aware about the REIT, but to say that, why REIT is right, why every one of us should invest in REITs. So REIT is Real Estate Investment Trust. Oh, sorry, it's with me. Yeah. REIT is Real Estate Investment Trust. So what REITs do, it has large pool of assets, diversified assets, which are income generating. So whatever income REIT earns after deducting operational expenses is distributed to investors. So REIT is, to understand REIT in simple manner, it's exactly like mutual fund. The structure is also like mutual fund. There's a trust. Trust owns properties, pool of assets, diversified assets located at various locations, different geographies. Out of those, all these assets are rented out. All the rental income, what we earn from this properties, after netting off operational expenses, the entire sum is distributed to REIT. REIT is a pass-through vehicle, no taxes deducted at REIT, and REIT in turn distributes it to the unit holders. Now, there are two more parties which are there in REIT. One is REIT manager, which is called investment manager. There are two responsibilities on investment manager: to identify the assets, investment part, and to manage the asset management part. And we have trustee also. So trustee acts on behalf of unit holders and ensure that all the compliances, along with manager of course, all the compliances, governance being taken care for the REIT. This slide is about the journey of REIT. In 2014, SEBI has come up with REIT regulations, and in 2019, the first REIT got listed called Embassy REIT, and it was followed by various other REITs. Today, there are 6 listed REITs, 5 are focusing on office market, and 1 is focusing on retail mall. Recently, SEBI has reclassified REIT from hybrid instrument to equity instrument, and because of that, now we have seen in past few days, a lot of flows were there in REITs, and because of that, the 5 listed REITs have seen a lot of volumes and price movement also in the exchanges. So to give you some background on the REITs, worldwide, in 1960, that was the first time the REIT got set up in USA. Until today, the size is 1.2 trillion. So you can see that, how much scope is there for REITs to flourish from here, to grow from here. There are other countries also, like Australia, the size is 124 billion, Singapore, 77 billion. India, we are at 21 billion today. It looks pretty small in terms of the large numbers with other countries, but good news is that this 21 billion we have achieved in just last 6-7 years. So there's a long way to go, but I'm very hopeful that from here we can surpass various other geographies also, various other countries also. So this slide is again, will explain how REIT is playing in other geographies. If you see the first bar here, in USA, 98% of listed real estate is comprising of REITs. Similarly, in Australia, it's 95%. However, in India, we have just started. We are currently at 20% of the listed real estate stock which is there today. And for the market cap, if we compare with all the market cap which is there today, we are just 0.4%. So there's a long way to grow from here. And the way the things are as such, I mean, there's no doubt that we can cross other geographies also. Now, to give you a lot of sense on how investor community is looking at it, if you see, the first bucket is FPIs. FPIs has invested more than 23,000 crore till today in REITs, and you can see the marquee names which have already invested in the listed REIT setup: Fidelity, Bain, Blackstone, Brookfield, GIC, all of these. And there are mutual funds also. Mutual funds have also invested more than 24,000 crore. All the large funds have invested, taken stakes, investment in the listed REITs. And gradually now we have seen insurance companies as well as pension funds are also taking investment in the REITs. The good thing is, if you see this side, right-hand side, when the first REIT got listed, the retail participation was just 6,000 shares. In last 6-7 years, thanks to all the awareness programs and through various mechanisms, this number has increased almost 80 times. Today it is around 460,000. Now, lot more have to be done from here to take this number to much higher, so that there will be a lot of participation from retail players also in this product. To give you, few anecdotes on what REIT have done so far in India. So we are managing, all 6 REITs are managing upwards of 200 million square feet facility today. Our gross asset under management is 310,000 crore plus. We have raised equity of 46,400 crore. That's a huge number. If I add what InvITs has raised in last 10, 12 years, this number will be like 2,22,000 crore, which is a huge number. As I said in the beginning also, this entire sum was utilized to repay the debt in those projects. Imagine the 2,22,000 crore over a period of time is utilized for nation building. Banks have lended again for new projects, new developments, IT corridors, logistics setups, those kind of developments which we have seen over a period of time. That was possible because of this capital got released. We have seen in the previous slide how foreign players have invested in this product, how mutual funds have invested in this product. And we have distributed upwards of 31,000 crore till now among the 5 REITs. Bagmani is the recent entry. Just few weeks back it got added, so that number is not here. But among 5 of us, we have distributed 31,000 to all the unit holders. This is a very important slide to explain why one should invest in REITs. What's there? I mean, there are various instruments, various fixed income instruments are available today. People are investing in those instruments. People are investing in physical real estate also. I will cover physical real estate in my next slide. But why one should go and invest in REITs? REITs are professionally managed. It's a professional management. It's highly liquid instrument. If someone who is investing in REIT today, it's very simple. Anyone, I'm sure in the room, everyone is investing in equity shares also. Everyone has Demat account also. For REIT, prerequisite is Demat account and access to the broker or to the online account. Just go and buy any of the 6 listed REIT. It's so simple. Now, SEBI has, reduced the lot size also. Now, someone can go and buy 1 unit also. It's as simple as like buying any listed company shares. So, there's a huge liquidity. If you want to sell, if someone is in need of funds, you just sell it. We heard in the previous session, T+1, you get the money also. So there's a high liquidity. Because of this, one should look for investment in REITs. And it's a SEBI-regulated product. So there's a high corporate governance which is there, strong governance which is there. And as per REIT regulation, SEBI REIT regulation, all REITs are mandated to distribute 90% of the surplus what they are earning. It's completely different from the listed setup. In listed companies also, they distribute, but it's on their choice. If they want to deploy funds in the company itself, they can do that. But however, for REITs, it is mandatory to distribute 90% of the cash flows. This gives the regular income flow to the unit holders. And growth. This is, again, different from other fixed instruments, let's say fixed deposit, where there's limited growth opportunities there. But anyone who is investing in REIT, there's a growth potential. So there are a couple of reasons. As I said earlier also, there's a pool of assets. REIT is a trust, and there are assets which are there. And all these assets are income generating, means we have rented out all those assets. So when we rent it out, lease it out to the tenants, the conditions like, for the escalation, either we have like 5% escalation every year or 15% escalation every 3 years. So this gives a kicker. This gives a growth factor in the REIT portfolio. Second, we do a lot of acquisitions also. To grow the portfolio, we do a lot of acquisitions also. That acquisition also give kicker. So that's why there's a growth element is there. If someone who is investing in REITs can eye the fixed income, which we are distributing on quarterly basis, plus the capital acquisition which is there. So I have a slide also wherein I will talk more about the returns, what REITs have delivered so far in last 6-7 years. And diversification. So diversified portfolio. All the listed REITs have presence in different geographies, different cities, different micro markets. So the portfolio is diversified. You all know here that, diversification reduces the risk. So that's how investment in REITs reduces the risk because of the diversified portfolio. Yeah, this is a slide on returns. So if you see, we are here, REITs are here. In last 6-7 years, REIT has given return of 15.5%. In comparison to other instruments, GSEC it's a slightly dated one. Today it is around 6.7%. Fixed deposit around again 6.6, 6.7%. Mutual funds in last few years, they have given a return of 12.5%. However, REIT, so there are two components to it, which I explained on a previous slide also. This 6.1 represents the regular income, stable income, what we distribute on quarterly basis. And 9.4% is the capital appreciation. So REIT has a, let's say, the unit price of 100 rupees. So in last 6-7 years, that REIT, someone has invested in that REIT, has given a 9.4% CAGR also. That 100 rupees had moved up to, let's say, 140, 150 rupees. So that's why the invested amount also increased along with the fixed income what someone has earned over a period of time. And Nifty in the similar period has given a return of 12%. But if I talk about Nifty, if you see last 10-11 months, Nifty has given negative return. However, REIT has given a return of upwards of 12 to 13%. So that's the beauty of this product. In turmoil situation, in tough market also, the return are intact. Why it is intact? Because the cash flows what we own in the REIT are contracted ones. Whatever happens, we have seen the West Asia crisis also. We have seen trade got affected. But people who have taken space with these REITs have paid those rentals. So in case of REIT, rental flow is there, income is there, so that's why we are distributing. So that's why in last 10-12 months, difficult situation also, we are able to give maybe 12-13% return. However, if you see the Nifty, it was traded negative. It has given a negative returns. Now, each one of us have invested in real estate at some point of our careers. So maybe if you can see that, if you can go back and see that, how you have acquired your first real estate investment, whether there was any pain points were there. I'm sure I can share my experience. I was running with all the brokers, around the brokers, different localities. To freeze on one asset, it took me like a couple of months. And when I was looking for bigger space, I was trying to sell that space, which I was owning. It took me another 6 months. Because the day when I wanted to sell, I was not getting that kind of return or expectation, the valuation. So that's what the challenges in physical real estates are. A, there's a huge capital outlay which is required on day one. If let's say, if you want to invest in Newtown or maybe Salt Lake, sorry, I'm not aware about the price points which are going here. I can give you some anecdotes in Mumbai, but maybe you all can relate because from Kolkata. So someone eyeing to buy in Salt Lake may have to share out like, huge investment today. The beauty about REIT is with the smaller sum also, smaller quantum also, one can start investing in the REITs. Liquidity, as I explained, it's very difficult to sell physical real estate at the time when you need money. However, if you see REITs, if you decide today during market hours, you can sell it and T+1 you'll get the money. So that's the liquidity, that's the liquid instrument REIT is. Diversification, if someone who is acquiring any physical real estate, probably maybe someone can acquire one in Newtown, one in Salt Lake, or one in any other location, right? But ultimately, capital pool is limited. But so with your own money, if you're trying to buy real estate, you can acquire limited pool of assets. However, if you see the REITs, all REITs have, as I said, like we are managing among 5 REITs more than 200 million square feet. So each REIT, I'm sure, it's upwards of 40-45 million square feet which someone is managing. So imagine the kind of pool, if someone invests in REIT, the kind of pool access which any investor will get is huge. So, and different locations also. It's not only in Kolkata, in few locations. These REITs have presence in Bangalore, Hyderabad, Mumbai, NCR, these regions. And in India, when it comes to commercial office leases, few locations, as I named, like, Bangalore, Hyderabad, Chennai, Mumbai are doing pretty well. So these REITs have presence in these cities. The portfolio is comprising of assets which are located in these cities. So imagine someone investing in the REIT, getting access, maybe the fractional ownership of all those assets which are located in these cities. However, if someone wants to invest on their own, maybe 1, 2, 3, that kind of asset investment one can do. Another hassle in physical real estate is, which I'm sure every one of us has experienced, whether we buy a second home or the commercial complex and we rent it out. Finding a new tenant is a hassle. And if the tenant vacates the space mid of the year, it's a huge hassle to find a new tenant. So these are the challenges of physical real estate. You have to be always focusing on your asset. Sometimes you may have to see that, maintenance is required, it's your headache. From your routine stuff, whatever you're doing, your business, you have to move out and see for that property, and a lot of pain points are there. And what happens in REIT? We are managing these assets. It's a professional people who are managing these assets. We have a leasing team. We have 45, 50, 60 million square feet. We have to take care leasing of that 60 million square feet. So we have a huge experienced people sitting on the board taking care for leasing. Likewise for maintenance also. Lift is not working, we have a team here who take care for the, the maintenance part also. Anything in the portfolio, if any capex is required, we have professional people who are sitting, who are taking a call and doing those capex requirements also. But physical real estate, a lot of hassle when it comes to operation and maintenance also. And transparency in regulation. So it's, as I said, it's a SEBI-regulated product and it's highly transparent. Lot of, in terms of, if I give you a few examples on it, which SEBI has implemented on REITs, like every 6 months, we have to share the valuation report with our unit holders. So let's say if REIT has presence in Mumbai or in Kolkata, you all will have access of those valuation reports. Some property in Salt Lake, whatever valuation we have taken, from the report from the investor can make out whether we are cooking that valuation or not, right? So that kind of transparency is there. Twice in a year, we share that valuation report with all the unit holders. However, in listed companies, it's not mandatory. So that's why I'm saying it's a highly regulated product. At any point in time, if you want to compare the performance of REIT, it's very much possible because of the kind of information what we are sharing with the Bombay Stock Exchange, NSE, or with the SEBI also. And I should not say much about physical real estate challenges, transparency, because it's need basis. It's someone, who wants money today, he has to sell, people will take advantage of it. But REIT, nothing like that. You just sell it, click the button, T+1, you will get the money also. So that's the benefit of REIT if someone wants to remain invested in the REIT. Now this is the important slide for the audience which we have today. I'm assuming all our chartered accountants, and taxation is something which is close to our heart. So believe me, this is one slide which we take a lot of time to explain other audience, but I'm sure with this audience, there will be less pain for me. As I mentioned, REIT is a pass-through, right? So there is no tax levied at REIT level, but when REIT distributes to unit holders, how the taxation happens. So there are 3 components what we distribute to unit holders. It's not that complicated, but let me try to simplify. One is dividend. So all distribution has 3 components: dividend, interest income, and repayment of capital. These are the 3. Now, dividend, whatever we are distributing, it is tax exempt in the hands of unit holders. Imagine this is the one of a product which all the accretive income which we are distributing in the form of dividend is exempt. We have seen other instruments also. In FD, also if you have invested, any accretive interest what you're earning on it, you have to pay tax on it. But the beauty about REITs is dividend is completely tax exempt. Then interest income. Interest is taxable at the applicable tax rates, and repayment of capital. So repayment of capital on the day when we distribute, it is not taxable in the hands of unit holders. So this is again is a tax exempt component. Now let me explain you a bit how the treatment happens for repayment of capital. So repayment of capital is reduced from the cost of acquisition. So on day when you receive repayment of capital, there is no tax incidence, there is no tax liability. But when you sell the unit, at that point of time, you may have to pay LTCG or STCG, depends on the holding period, because your cost of acquisition, let's say cost of acquisition was 100, and if you have distributed, let's say, 5 rupees, 1 rupees in the form of repayment of capital, your cost of acquisition becomes 100 minus 1, 99. So when you sell, whatever the price, let's say 140 minus 99 on the surplus amount, one has to pay the capital gain tax or LTCG or STCG, as I said, depends on the holding period. Now, if I see all the REITs today, roughly to make it more easier to understand what will be the tax exempt portion in REITs. So roughly 65 to 70 or maybe 75 in some cases, it is tax exempt. It means we are distributing a lot in the form of dividend or repayment of capital. So repayment of capital, if you invest in mutual funds also, whatever the accretive income is, you have to pay capital gains. Here also, repayment of capital, you are paying only capital gain tax only. So the kicker is the dividend, it's exempt in the hands of unit holders. I hope I am able to, simplify the taxation part. So in short, REITs distributing approximately 70-75% is exempt from tax. Balance is interest component on which investors have to pay tax as per their tax slab rates. Now, as I already touched upon this, how easy it is to invest in REITs and InvITs. We all have experience and exposure in listed space, or especially on the equity market. And so it's very easy. There is no restriction. Any domestic player, foreign player, any retailers like you and me, institutional players should have demat account and access to the broker or the online account, trading account. Just buy the unit. As number of units you want to buy, deploy your funds, surplus funds, you can do it. It's listed on both stock exchanges, BSE and NSE. Now let me discuss briefly on the growth potential which is there in REITs today in India. So roughly we have like commercial office, if I talk about entire India, it's around 800-900 million square feet of commercial office space which is available. Out of that, retail is roughly around 600 million square feet. And as I said, 6 listed REITs owns managing today 200 million square feet. So still there's a room, 3x growth which is possible today in today's circumstance also. And every day, developers are developing, supply is created, and this 600 million square feet, because there's a lot of focus on grade A development now, so this 600 million square feet will increase also. There's a huge potential which is there today. We have seen other geographies also, where in India is just 20% of the listed real estate stock today. So we have long room and we have huge opportunity which is sitting in front of us to scale up from here. We have on the other slide, on other side it is the retail stock. So I'm talking about retail, reason being, we have one listed REIT in retail space also, and we believe that there will be few more players will be targeting this asset class and they will be listing the retail stock in India. So retail stock is roughly around, 90 to 100 million square feet which is available today. Now, in first only one REIT which got listed, it's holding 10-11 million square feet. So there is like 8x opportunity which is there. So in both the spaces, there's a huge opportunity which is there. Having said that, we have, from attended various government forums also, and there's a lot more focus on new asset classes which can be part of REITs, like healthcare, industrial, warehousing, data centers, hospitality. So from here, we'll see various other sectors also, which either will come up with the REITs or invest in near future. So there's a huge potential, and so so the intent of this presentation was to make everyone aware REIT is simple. REIT is simple. It's very easy to invest in REITs, and being Indians, there are two asset classes which are close to our heart. One is gold and second is real estate. Now, we have seen, I try to explain that the hassle which is there in physical real estate, there is a substitute now. One can invest in REIT and can take the similar kind of benefits. Or rather, I'll say, most part of the income is tax exempt. So you can earn tax exempt on the accretive income also. So that's the beauty about REIT. Now, I'll take a pause here, and maybe I'll be happy to address any questions from the audience? This one?
Just before this.
This one?
Just after this.
So this was the first, second, third.
Next after.
Next.
Then, where you were showing like there was a retail participation of 6,000.
Yeah. Here.
Yes, this one. So what is the amount of retail participation and the percentage of it?
So, good question. Today also, in terms of numbers, it seems that we have achieved 80x multiple in terms of unit holders, but the quantum is pretty less. When we see the FPIs or mutual funds or insurance companies, they are still investing in huge numbers. So it's a very negligible number as on today.
So how the retail investor will get protected if these foreign portfolio managers or insurance companies or pension funds, they take away the money? Because their size is a huge one. So how you will, the REITs will control the retail protection on this?
So it's not like that. So, there is a huge amount of stock which is available, which is traded on daily basis on both the exchanges, right? So I have seen in our portfolio also that insurance companies are selling, right? And there are a lot of family offices, HNIs, ultra HNIs have taken huge investments in REITs now. So what I'm trying to say is that it's not like limited stock which is traded on daily basis. There is opportunity. If someone wants to invest, they can invest. What's happening today is that retail players is still not getting the essence of REIT. Why REIT is important, what sort of returns REIT is able to deliver. And, as I said, like, you all understand tax well, right? But it gets very difficult to convince people that tax is not a challenge here. You are going to earn tax-free income on this investment. So that's why retail is slightly shying away. But having said that, we can see the individual investors are also increasing. Like Embassy, if I talk about Embassy 2019, when they started, there were few thousands. Today, the unit holders are more than 1 lakh. So because of retail participation, this number is increasing. So awareness is increasing day by day. We are trying to see through IRA again that how we can reach out maximum to the retail investors. We are trying to, make them aware in the local vernacular language also now, so that they can understand the REIT product, they can understand the taxation. There is no challenge as such. It's like 70-75% income which is tax-free, imagine. Which investment gives tax-free income today to us? Now, one thing which I missed telling, why this is a tax-free income, dividend, right? It cannot be lost to the government. So what happens is, REIT invests in SPVs. All these SPVs are under old tax regime, are paying high tax. There is no loss to the government. At SPV level, we are paying higher tax. That's why we are getting this DDT exemption, which we are passing on to unit holders.
So, sir, my question was with respect to the retail investor risk. Like when these foreign portfolio investors, insurance companies, pension funds, and these mutual funds, if they one day come and they want to try to take the funds out, how the retail investors fund will be secured? Because there is a high risk in that. So my second question now, since you have emphasized on the tax part, you have correctly mentioned now that it's under the old tax regime, the dividend is exempt. But since the government and everyone's initiative is to move most of the taxpayers from old to new, because most of the deductions or the benefits are coming more to the new one, then how there would be a tax benefit in the new tax regime?
Let me answer your first question first. 6-7 years, we have seen these investments from FPIs, mutual funds also, they are intact. One mutual fund exits, but the other takes the position. Why they are taking the position? We need to understand that. Because this is one of the instruments which gives the tax exempt income. So that's why they are eyeing this product and they are keeping, investment intact. So everyone has threshold. Mutual fund, there are various schemes are there. Earlier, they used to invest from hybrid scheme where the cap was there. But now, since it's classified as equity, they can invest from equity scheme also. So everyone which is eyeing a threshold, maybe the threshold of, let's say, if they want to earn maybe 15%, they can remain invested for 1 year. After 1 year, they will exit. But there will be different mutual fund who will be taking the position here. What was your second question?
Second question was with respect to the tax benefit. It's not there in the new tax regime, right?
Yeah. So let me give you, in last budget, the MAT credit benefit which was there in old tax regime is taken away. Right? It's a hit which we all REITs are taking under our balance sheets. It's a P&L hit, it's not a cash flow hit, right? So although a lot of discussions, deliberations still on with the government also, with the right set of people also, but we are still in old tax regime. We are still paying high tax. We are foregoing the MAT benefit also. Why? Because for us, dividend distribution, what we are doing on quarterly basis, that matters more for investors. It should be tax-free in the hands of investors. If they have to pay tax on dividend also, then there will be no comparison. I mean, there will be no edge on this product with respect to other products then.
So if no one is asking any more questions, I can ask one more question. So, sir, just, sure, I can do that.
Thank you.
Okay. Thank you. So I hope we all can say REIT right hai.
Friends, we had a very lively, interactive and educating session by CA Neeraj Toshniwal on understanding REITs, key features and benefits. With his deliberation, we at the audience has certainly got knowledge and broad idea about REITs. Thank you, sir, for your nice deliberation. So a big round of applause to CA Neeraj Toshniwal, sir. Thank you. May I call CA Viswaranjan Sutar for the next technical session.